Aloha folks, thank you so much for checking out this video. If you are new to the channel, my name is Mark, Mr. Dividend Investor. In this channel, we look at great dividend companies that we invest on. So if you want to learn about dividend investing, you've come to the right channel. Hit that subscribe button. Don't forget to hit the notification bell so you don't miss out on the videos that I put out. And also do me a favor, hit that like button. It helps the channel grow. With that said, please remember that all of this is not financial advice. This is just me sharing. In this video, we are going to look at a viewer request. So if you have any requests of stocks that you want me to review on, definitely put those requests in the comment section and I'll go research it and possibly put a video. So for this video, we are going to talk about this company that has been giving dividends for the past 35 years without a reduction. It's considered 50% undervalued based on the source, so we'll go through those as well. And it's been growing 15% the last 5 years in terms of dividend growth. So sit back, enjoy it. Let's take a look at this company. So this company is T. Rowe Price. The ticker symbol is TROW. It is a global investment management organization which engages in the provision of investment management services. So pretty straightforward. It is a company that you can set up for retirement, general investing, college savings. So you can see all those stuff. So now if we swing by to tip ranks at the time of this video, it is at 153. Analysis rating based on tip ranks, it is a hold, which is 2 buys, 3 holds, and 4 sell. Price target is in 172 with a 12% upside. 12-month forecast rated as a high of 212, the average of 172, and the low of 116. Now if we look down further to some of the analysis, you can see it's kind of like a mixture. Some say it's a 12% upside, while others says it's a 11% upside. So you can see from there, you can see some of them are selling, but they feel it's a 38% upside. So let's take a look at Simply Safe Dividend. Based on their dividend safety score, they rate it as a 94, which is very safe. Market cap is about 35 billion, which is considered a large cap. The dividend yield is 3.13. Now looking down to some of the key metrics, you can see payout ratio is 32, which is edging higher for asset managers. Forward payout ratio is about 39. Check this out, recession dividend, they have increased it during the 07-09. Looking down to the dividend growth, you can see again, when I look at the dividend growth, I always look at the upward trend, and you can see beautiful upward trend. Last 20 years 14%, which is very fast. Last 5 years 15%, which is very fast. The latest is about 11%, which is fast. Now check this out, dividend growth streak of 35 years without a reduction, and has been increases for 35 years. So pretty solid growth in my opinion. Your payout details, you get quarterly in the months of March, June, September, and December. The ex-dividend date is March 14. So if you want to invest in this company, you got do it before the March 14. That way you can get paid on March 30th. Again, ex-dividend date. So make sure if you're considering that, do it before March 14. That way you can get the dividend. Yeah. Now moving along to the valuation, you can see the stock may be undervalued based on Simply Safe Dividend. Now looking down to the financials, you can see sales growth. You can see 24, which is kind of stagnant from 21. I'm looking at the reversement on investment capital. You can see 36%, and then return on equity is about 32%. So that's the latest one. Yeah. Now moving along to CNN Business. Based on their price forecast, they rated as a high of 198, the median of 170, and the low of 116, with an analysis recommendations of 2 buys, 7 holds, and 1 outperform, and then they got a bunch of 3 sells. Now let's take a look at bar chart. You can see Barchart has some articles, so definitely go check this out. It's a great tool. I'm not sponsored by it, so but then hey, if you guys are listening and Barchart is done, hook me up. Definitely great company. I like this source. So now if you read this one, you can see some of the things that they talked about, which is T. Rowe Price net revenue, so a compounded annual growth rate of CAGR of 12% over the last 6 months. You can see some more. It says the T. Rowe Price return on equity is 36% compared to the industry average of 17%. But then you can look at it, it says, however, rising operation costs might hinder bottom line growth. So investors must consider these factors before making any decision. So one of the things that when you are thinking about investing, you always want to do your due diligence and understand the company. Don't just go invest on things that you don't understand. So always make sure you read these kinds of things, read their balance sheets and all that, so that you better have an understanding of the company and what it does. Yeah. Now looking along to some more key metrics, you see looking at the return on equity, you got 36, return on assets 26, price to book ratio is about 3. Now look at this one in the growth. You can see 3-year return, you get 57, 5-year return about 115, and then you got your dividends on this side. So you get paid on the 3rd, 15, 614, 624, 914, and then you got 1215. So you get pretty much that. You can see on the 6th they had a double one, so they had a special dividend in there. So sometimes companies do that, they throw in the special dividends, so which is good. Now if we go to Webull, you can see based on their analysis, 13 analysis, they rated as a hold. You got 50% as a hold, 7% as a buy, and then 7% as a strong buy. Looking down to the price targets, you can see a high of 200, an average of 167, and a low of 116. Now moving along to Simply Wall Street, based on their evaluation, you can see price versus fair value. You can see right here it's 50% undervalued. So their fair price rated as a high of 307. Currently is about 153. Now if we go to company overview, you can see some of these things. Inside selling the past 3 months, flawless balance sheet, undervalued, and pays a dividend. So here's a reliable dividend of 2 points. So these are the rewards thing. Yeah. Now if we swing by to Robinhood, again for the week it's up 0.2. For the month it's up -18. 3 months it's up -29. For the year it's down -8. And then for 5 year it's up 126. So I started my position, I only have 1 share. I'm only up 0.34. So I'm gonna dollar cost average in this. I'm not gonna go buy 20 shares at one time, 10 shares at one time. I'm going to nibble. If it's on a downward trend, I'll take 1 share or 2 shares. So I'm gonna slowly build my position on this. So anytime I buy a stock, I always try to make sure I have a target amount of shares. So for this one, I'll probably it's not going to be a major player in my portfolio. However, for my goal of this one will probably be around 30 to 40 shares, and then that'll be it. So again, my plan for this one is a dollar cost average. I'm going to probably do 1 or 2 shares when I see a dip. But yeah, so for me, I think it's a buy. However, please make sure if you are thinking about this, always do your due diligence and do your research. Yeah. So with that said, if you're ever in Instagram, look me up, Mr. Dividend Investor. So I do a lot of postings there as well. I also, if you have time, check out some of the videos. A lot more other videos that if you're interested in dividend investing, there's a lot more in there. All right, guys, thank you so much for watching. Do me a favor, like and subscribe, hit that notification bell. With that said, thank you so much for watching. Hope you liked this video. Stay cool, keep investing, and I'll catch you guys in the next video, right? Take care. Aloha.